This is the way bear markets work in any asset. We go right through fair value and we go to washed out levels where no one will ever buy commodities again. No one will ever buy NVIDIA again. No one will ever buy Bitcoin again. Yeah, whatever. Now we're in crypto summer right now. We started crypto summer in June. We'll be in crypto summer till right after the halving next June. We went from zero, and I know we got to get going here, but we went from zero.
Take your time.
15 years ago. 15 years from zero to $850 billion of value. How did it do that?
Bitcoin is making waves yet again. Just when we thought it couldn't get any more exciting, recent predictions by esteemed investor Mark Yusko have sent shockwaves through the cryptosphere. He's indicating that Bitcoin's fair value, already perched above $50,000, is on the verge of doubling. Mark Yusko, known for his spot-on forecasts, highlighted the mesmerizing correlation between Bitcoin's current value and its historical trends. According to Yusko, based on Metcalfe's law model's accuracy in foreseeing Bitcoin's meteoric rise to $10,000 in 2017, the current fair value is pegged at over $50,000. But here's the kicker. Bitcoin has already ascended to the pinnacle of $50,000. And if it maintains this trajectory, the road ahead appears poised for further ascent. As Bitcoin continues its journey upward, it sets the stage for what could potentially be an even more exhilarating climb. Can it scale the lofty heights of $100,000? The answer lies in the hands of time. But if the current trajectory is any indication, Bitcoin's future looks incredibly bright. Let's explore Mark Yusko's insights and navigate through the ever-evolving world of cryptocurrency, understanding Bitcoin's fair value.
Tim Peterson, a friend of mine who runs something called N Squared Crypto, had created this Metcalfe's Law model. Now, the original Metcalfe's Law model that I found back in 2014 was actually pretty darn good. He posted this chart, and it's a parabolic chart. It's a nonlinear logarithmic regression. And it predicted that on November 6th of 2017, we'd hit 10,000. And is off by 6 days. It actually hit on November 1st. Like a pretty good model. But then it started to diverge a little bit over the next few years, and was talking with Tim, and he said, look, their decay factor is too high, is too low. So people come into the network. And anyway, what is Metcalfe's Law? Metcalfe's Law is a theory or arithmetic rule created by this guy, I think his name's Thomas Metcalfe, at MIT. And he noticed that there's this guy Sarnoff that did work on how networks grow. And it was a simple theory that if you had a big antenna and everyone who could hear that signal was part of a network. And that was fine. But that said that networks grew linearly. But Metcalfe came along and said, well, no, because if Mark and Scott both hear it, maybe they'll communicate, so there'll be more connections. And so every time you add a node, you get multiple connections, and it's actually an exponential factor. And the difference between linear growth and exponential growth is the key here. And so anyway, all this just goes to say that sometimes people join a network and then they leave. Sometimes they come and they add value. But bottom line, Tim fixed the decay factor, and his model has just been spot on. It said we were 30K fair value back when we pumped all the way to 69.
The 4-year cycle and Bitcoin's doubling.
Look, we always go above fair value in crypto fall. At the opening, you were talking about the seasons. And look, I didn't make this up. I've observed it. I focus on it, but it's not my thing. But the idea that somehow the 4-year cycle is going to go away just doesn't make any sense to me. It's hard coded into Bitcoin's program, and that's the halving. And so what happens is the halving occurs, and if the price didn't move, what would happen? Most of the miners would go out of business. Think about it. Their electricity costs are fixed. Their machine costs are fixed. And so if suddenly the block rewards get cut in half, if the price doesn't adjust, some of them have to go out of business. So what we have seen in each of the previous cycles is the price doubles. That makes sense. That doubling is a fair value doubling. Something goes up a lot quickly. What happens? People get stupid. They start to tumble in. And the way to think about it is after the collapse, right? We all know the crypto winters. So winter is when we have the collapse. And what is a collapse? A collapse is where we fall from craziness, euphoria, back to fair value, but we don't stop at fair value. This is the way bear markets work in any asset. We go right through fair value and we go to washed out levels where no one will ever buy commodities again. No one will ever buy NVIDIA again. No one will ever buy Bitcoin again. Yeah, whatever. Because the average investor does two things really, really well. We buy what we wish we would have bought, and we're spectacular at that. We pile in after something goes up because it feels good. When it's down low, it doesn't feel good to buy it, but that's when you want to invest. You want to actually make yourself uncomfortable. Second thing we do really well is we sell what we're about to need. So investing is the only business I know, and I've said this for years. It's the only business I know when things go on sale, everyone runs out of the store. Put Bitcoin on sale, put investments on. Anyway, so the average investor, you're right, doesn't do it the right way. But investing, capital I investing, is about buying things below fair value. Okay, that's the idea. But then you start to create. So then we get out of crypto winter and we go to crypto spring. Now, crypto spring is not boing, V-shaped bottom, everything's going back. Spring is wet, and nasty, and windy, and cold, and it's kind of like just you're bouncing along the bottom, a little bit of, but that's when you accumulate well below fair value. Then we get to crypto summer. Now we're in crypto summer right now. We started crypto summer in June. We'll be in crypto summer till right after the halving next June. And what is crypto summer? Well, crypto summer is where we slowly accrete back to fair value. And what have we done, right? We got washed out.
Emotionless trading and strategic tools.
What have we done? Higher highs and higher lows. It's the most beautiful accumulation pattern you have ever seen. And that is investors buying below fair value. Now, when we get to fair value at 50, what's going to happen? The halving is going to occur. Well, then what happens? Well, we add a zero. So if you go back to the first halving, we went from 10 to 100. Then we went from 100 to 1,000. Then we went from 1,000 to 10,000. Now we're going to go from 10,000 to 100,000. That's a 10x growth of the network. Again, following this Metcalfe's law curve, that is a beautiful, beautiful accumulation pattern. I mean, it's just absolutely stunning. And when this occurs, and it's also an amazing cup and handle pattern, if you look at it over a little longer scale, I mean, whew, beautiful. And all of this says that the investors are buying. But as we approach fair value, what happens? The traders come in. And we've seen that a little bit now. The traders are coming. Traders aren't bad. Traders just don't give a crap about what they're buying. They just want movement, and they'll buy, they'll sell, they'll trade. I'm not very good at it. I don't really do it. I'm a boring value guy. I like to buy things below fair value and hold them. That's easy. I'm not a very good trader. But then what happens as you start to get above fair value, as we enter into crypto fall next June, then we'll start to get above fair value. Now we'll go from that 50 to 100. And that 50 to 100, it's probably going to happen really fast. Why do I say that? Two reasons. One, that's what history tells us, that FOMO kicks in. But this time we got a massive tailwind. Last time we had GBTC. About $10 billion came in GBTC. We went from 10 to 60 really fast. Then Elon, put out the famous quote, went from 60 to 30 in a heartbeat. And then we went back to 69 because Michael Saylor bailed us out. Well, this time, if fair value is at 50 and we're going to 100, that 50 to 100 candle was 31.
Yeah.
And so we were back to fair value. But then what happens is the speculators come in. Well, what's a speculator? A speculator is simply the opposite side of a hedger. Well, what's a hedger? A hedger is a miner, right? Gold miner, oil well operator that has to sell their production forward in the futures market. And so speculator has to take the other side. That's a good speculator. There are other speculators who just come in and they're just like, I'm buying it because it's moving. But here's the problem. It doesn't stop there. Then the gamblers come in. What's a gambler? A gambler doesn't give They don't care what it is. As long as it's moving, they're buying it with leverage. And the leverage is what causes the parabolic craziness where we go way above fair value and then you crash. And it's true of every asset. Look at every asset over time that's had these parabolic moves, whether it was Intel in 2000. It was the year of AI in Time Magazine. In 2000, Intel stock went up 20 times. It looks like a Bitcoin chart. It went up 20 times in less than 2 years because it's chips. We're going to change the world in AI. Now it's down 75% since then. It's crazy. And NVIDIA's up a lot because AI is not new, but everyone thinks it's new. And so you get these parabolic moves, but then you get a crash. NVIDIA's crashed twice more than 90%, like 12 times more than 50%. Who bought it in 1999 at the IPO and held it today? Almost no one. Same number of people that didn't buy Amazon at the IPO and hold it to today.
Minor corrections and growth indicators.
I'm not allowed to buy anything the day the ETF is approved. I can transfer money into it. That's real money that then they have to They have to create a new share. They have to buy spot Bitcoin. Now, here's the problem. Three-quarters of the coins haven't sold in a year. They haven't traded. We have $8 billion of trading volume every single day. It's the same Bitcoin over and over and over, like a tumbler. A washing machine, not a tumbler like a hider. But the key is that the price is going to rise because the demand is going to exceed supply. That's simple Econ 101. And it could be a big move because 10 billion from GBTC plus Saylor, singing his praises, moved us from 10 to 60 in about 10 weeks. Doesn't think there's going to be as much in those early days that goes in. And look, if it plays out that way, that will actually help the long-term cycle. But if there is a lot that comes in early, what will likely happen is we'll get a big candle and then some FUD, right? There'll be some FUD, whether
Something's coming.
We went from zero, and I know we got to get going here, but we went from zero.
Take your time.
15 years ago. 15 years from zero to $850 billion of value. How did it do that? Not in a straight line. Up, down, up, but every high is higher and every low is lower. Every low is higher. And that is an accumulation. There are now hundreds of millions of people. Eventually, there will be billions of people that use this asset. And what's really fun, and I'll leave you with this thought, right? I've been talking about this forever. The cycle of 54 with the mainframe, 68 with the microchip, 82 with the personal computer, 96 with the internet, 2010 with the mobile net, 2024 is the truth net. It hadn't even started. The cycle that we're all going to be excited about, and it's going to go for 14 years, hasn't even started. The tech evolves and then gets ready to blast off. And from 2024 to 2028 is going to be like 96 to 00.
As we wrap up this insightful exploration into Bitcoin's potential future, it is evident that the cryptocurrency market remains an ever-evolving landscape, subject to various factors and predictions. The forecasts discussed highlight diverse perspectives on Bitcoin's fair value, potential doubling, and the intricate dynamics affecting its trajectory. Remember, while these analyses and predictions offer valuable insights, the cryptocurrency market is known for its volatility and unpredictability. Investing in digital assets requires careful consideration, research, and a thorough understanding of the risks involved. Stay informed, keep abreast of market trends, and approach investment decisions with caution.